Is crypto a scam? Or is it a...
When ladies go shoe shopping, right, they will go to every single store and they put in the time, they walk 10,000, 20,000 steps. Do you do the same for when you purchase stocks or when you purchase crypto?
Look at my cool logo, right? They call it Keep It 100 coin or whatever.
It's not so much timing the market, but time in market. How many can actually do a $6 to $1,000 and see it drop to $500 and say, hey, maybe it's time to exit?
It's like if you're thinking, I want to go fast, I want to overtake him, confirm make mistake. The more you focus less on speed and you focus on the
Getting better.
Yes. Yeah. You suddenly become fast.
So I would go there and I would order my sandwich and I would like, can I pay in Bitcoin? Yeah, okay. They would flash me a QR code, and I'll... But now that I think about it, it's a very expensive sandwich. Very expensive sandwich.
Welcome to Keep It 100 Talks. My name is Thomas Yap, and most people know me as a car enthusiast or the guy that talks about Keep It 100. Right now we turned into a podcast. And the reason why we have this podcast is because I want to bring conversations that matter. For my life, I have many breakthroughs because of certain conversations I had with people or listening to other people's conversation. And I want to create this for people. I want this channel, this podcast to be the source where someone's life can really take a new path. So this is what we do. We keep it 100, we keep it real. We bring important topics around mindset, money, and lifestyle. Over the last decade, you probably heard good things and bad things about crypto, right? Crypto have ludicrous amount of returns, thousands of percent. Like, oh, I was in then and I made a lot. And then you hear the other story where people lose everything or they lose a lot of money. So I think we cannot deny anymore that crypto is something that is growing more and more. There's more and more traction, more and more interest inside crypto. But how do we navigate this world safely? How do we come out winning rather than losing? Or should we just stay away from it altogether? Right? Today we're going to invite two experts in the world of investing and education: Alvin Vong, the group CEO, and Andrew Vong, the chief future officers of Equities Tracker Berhad. Now, of course I got my script written down here, but one thing I really love is your backstory, how your father, the founder, talk about how he met somebody who his portfolio went kaput.
Yep.
And from that, he really wanted to empower more people to get information and education. And in Equity Trackers, they're not only a listed company, but they provide a lot of support to the thousands of people who have learned from them on how to invest, how to grow their portfolio, how to navigate this whole financial world, right? And of course, now they've extended their education and their services into the digital assets for the crypto world, right? Yeah. So I thought it would be perfect timing to have a chat with both Alvin and Andrew.
Cool.
Right? Thank you for being on our show. Right?
Thanks for having us.
Really cool. So, I want to start with this question. I know it's an immediate question. Okay, is crypto a scam? Or is it a hype that will die out later? Is it a fad or is it here to stay?
Okay, that's a very good question. I'll take this.
Go first.
Yeah. Look, I think a lot of crypto is a scam.
Really?
There's over 2.4 million coins out there.
Okay.
So a lot of it are scams. But there are ones that are not, and they are genuine, and they are genuinely pushing boundaries. They're genuinely trying to extend what we know of as the World Wide Web, as the internet. So when the internet was first started, it was just pure text. You had to be a computer scientist. You had to know Unix. You had to be able to be pretty technical. But look at us today, right? We whip out our smartphone and with just a few taps, and we are interacting with everyone on the internet. So it has evolved over time. So crypto is part of the evolution, is part of that experience that will change the way you interact with the internet. Some of them, some call it the Web3, but it pretty much is. So there are some projects that are genuinely real, and there are real use cases for it, or they are creating new use cases, just like Instagram and YouTube. Before there was no such use case for it, but then once we had high enough bandwidth, on our mobile phones, 4G, 5G, then it became a real use case. So a lot of what you see, you may feel that there's no real use case for crypto, but then once the infrastructure is in place, then suddenly the light comes on and you're like, oh yeah, this is a good use case. So yes, a lot of scams, But yes, there are genuine projects out there that are real. Yeah.
What?
I think if I just kind of add, like, coming from a traditional world or traditional market, I spent last 20 over years doing equities. So when you tell an equities guy, hey, buy something, they're like, but this one got no revenue, no earnings, no cash flow. So it's that mindset, right? That you go in and then, okay, so automatically it should be a scam. Should be lah, right? And I think this is where we need to kind of rewire our brains a little bit. If you look at it 20, 30 years ago, if you look at the top 50 companies in the world, they were, tangible companies, right? They were either building something or digging for oil or doing something, right? Fast forward equities market also today, if you look at the top 10 companies, they make money from intangible assets. Right? And it's not properly reflected in the balance sheet. So you always see that, your Apple, your Microsoft, they don't make money from tangible assets. They make money from services, right? So and you look at IFRS, right? International Financial Reporting Standards, always changes, right? And we have to understand that law and these kind of standards always, history of time, plays catch up. Right, when the first car was invented, there was no driving license.
Correct.
So it always plays catch up. So
like the old Spitfire got no seat belts, right?
Right. So it's always easy. Anything disruptive, I think it's just easy to kind of shut it off my mind and say it's a scam. But I think where you need to kind of dig further and really kind of understand it first before we come to that conclusion. Yeah.
But I think a lot of people come to maybe label it as a scam or dangerous. It's because more often than not, we also hear the stories of people kena burn lah. Right? They kena burn, right? Like over the last month of April, I think before the halving, and we're watching this, we're in April, May right now. The price went from 72 down to 60, like 3 times, right? Over the last 1 month, it's like, wow, so people get washed, man. Wash and wash and wash. Like, wow, ini kali lah, whack lah, then die, kali lah, right? So, I mean, this is one very recent example. But I'm sure in the past, there's even a lot more stories. So a lot of people have this like fear of losing again. Therefore, they just, because many people cannot burn, right? So how would you, I mean, I'm not trying to convince anybody to get into the crypto world. But how would you then say your opinion based on this? Because this experience may have the person feel like it's a scam because I cannot burn. Is it a scam or is it because they just cannot whack, right? In the
I don't know, you want to take it?
Look, I think for starters, you have those in the know and those who don't know. So meaning even for like drivers, right? Those who are very experienced drivers who know how to handle their car, and then you have those who are, they just got their L's or they just got their P's. So not so experienced lah. Similarly, I think with investing.
Equities market, same thing, right?
Whether equities or whether crypto or whether you're playing options trading or the futures, whatever that you go into, experience counts, and you have to put in I suppose in everything else that we do in life, you put in the hard work, you put in the time, the sweat, the tears, to get better at something that you do. So I think so. A lot of those who get burned, if they survive it, then they will continue to learn and they will continue to get a feel of the market and get to know the market and get to know the market players and how they work. You mentioned in April, it went up, came down, went up, came down, went up, came down. During that period, if you actually look at the open interest on the perpetual swaps, so in futures, those who were basically paying in order to leverage, right? They were paying a fee to leverage. Basically, you could see the more experienced investors coming in, seeing that, these guys are all over leveraged. So they whack them. Obviously, they whack them and make some money, right? That's and that is the market. That is what the market is. It's uneven information. And again, it doesn't have to be crypto. It can be stocks, can be anything else. It can be any markets.
Can be property, right?
Can be property too, right?
Yeah, exactly.
So what I'm gathering is that it's not a question whether it's a scam or not, or whether it's good or bad. It's just that maybe some people were not well equipped to deal with the situation, right? Right. What do you think drives people to really do this kind of moves? They over leverage, they jump in. Do you think it's FOMO, or do you think it's greed, or do you think it's the fear? You know,
I think any asset class we see, as long as there's a human being behind it, they always make the same mistakes. Don't care what asset class.
Time immemorial. From the beginning of
any asset class.
The FOMO is real. You can see fund flows, right? Either equities or other markets. When things go up, somehow, some reason, it suddenly makes sense and it becomes real, and therefore I need to own it, regardless of asset class. And we also see when it comes down, cannot. So everyone sells out. So that's why we see a lot of market cycles, right? And we have to understand short term, prices are sentiment dictated. Not so much fundamental. So it's in the short term they're saying, Buffett says this, right? Short term, the stock market or whatever markets are a voting machine. That means it's very emotional, sentiment driven. In the long term, it's a weighing machine. Yeah, correct. So we are more the weighing machine style, long term.
I see.
Yeah.
So it seems that getting, number one, not only just getting more skills, but also it sounds like being able to get the big picture, getting able to get yourself the big picture of how things are will help you be more centered when you enter any investment, any trading investment, or financial market.
It's the same, tools. Right? We can ask an average person who owns Bitcoin, have they read the white paper? That's kind of the base, right?
I haven't read the white paper.
Right? So that's where your why is, right? And it's something as simple as that. So whether we go into stocks and they're like, people always ask me, hey, this stock good or not? I'm like, so what business are they in? Wait, then they'll start Googling. What? So it's very speculative, right? It's you don't walk in with that investment mindset, right? Kind of understand the why or what you're actually buying, right? I think that's important.
The void of all that becomes speculation. Would you agree? Yeah. Or even borderline gambling, all right?
Yeah.
Right.
Nicer word to say gambling.
Gambling, speculation. Oh, I'm speculating, but actually I'm gambling, right? But this is really cool because I'm sure there are people watching this and then they go, well, this may give them a different light to look at this, right? And this is what Equities Tracker do, right? You guys educate, you guys give information.
We educate, we provide a platform for people to understand more about investments. For those who come in, they say, hey, too much work for me, then we also provide a service, fund management service, where we invest for you. We're also fully licensed by the Securities Commission. So we offer multiple services to serve investors, whichever path they want to choose.
Cool.
Yeah.
That's very nice.
Yeah.
We also have, I suppose we have a lot of events, so we cater to our community, because investing can be quite a lonely journey. So when you kind of have a community to do it together, to bounce ideas, to discuss, it becomes less lonely.
Yeah, and more steady lah. Not you like emo. Oh, hey, one santi, steady, good. Don't jump. Okay, right. At least we have a community to keep you grounded, right?
I think that's important,
Oh, absolutely, right. I think every human, has, like you say, sit behind. As long as humans doing shit, there'll be emotion,
emotion,
right? And I think as the more I trade, the more I meet people who are professional traders or some really good part-time traders. That means they make a good living. They all come back to one thing. It's all emotional management.
It is. In fact, there was a study done by a professor, can't remember which university. She did a TED talk where she did a study, right, between monkeys and human beings to try and understand how monkeys would use money and how humans would, right? Quite interesting. So they actually train capucha monkeys, they're about this tall, into this cage, right? And they actually teach them how to use money. So they're like, at first they gave them tokens, then they were like, what's this token? Try to eat it, then they throw it away. But eventually they learn that if I give this token to a human being, I will get 1 grape. So then they learn, right? And then straight away what you expect with money is that then monkeys started fighting. because they wanted to start hoarding the tokens, right?
coins.
Because now it's worth something, right?
Wow.
Then eventually they will give them a bet, right? So one bet was okay, if you give me this one token, guaranteed you're gonna get one grape. But I give you the token if you choose this box, you get 3 grapes, that means 3 times more. But only half the time you get the grape. That means you put and you actually will lose. Right? Any guess? Finally then they did the same test, right, with human beings. So they, of course, we didn't tell them to teach them money, gave them fill in some questionnaire, and then they brought in another group of research guys to say, okay, I want you guys to differentiate these results between humans and monkeys. Right, and
exactly the same.
Exactly the same.
Damn, monkeys.
Same. They couldn't differentiate which was monkey data, which was human data. Yeah.
Really?
Yeah. So because our DNA is 97% monkey, so what she concluded was a lot of what we do is very primal. This emotional, like if it comes down a lot and you don't want to cut loss, monkeys do the same. Say it comes down and then suddenly goes to that break-even level, you quickly take profit. You quickly close that gap. Monkeys will do the same. It goes up very high and then you buy some more. Be more risky. Monkeys also do the same.
Oh gosh.
Yeah.
I feel like I'm monkey right now. I got my head right.
Yeah. So all these, I think you can learn as much as you can, but a lot of it is emotional, and because I'll send you the link.
Oh, that'd be nice to watch.
Yeah.
And one thing you highlighted, there's a really cool revelation to know that, because I think it's playing out in any asset class, right? Especially now the hype is in crypto, right? So that you see even more of this enlarged, now with leverage and everything, enlarged even more disproportionately, right?
I mean, like very recently, gold prices went.
Oh yeah.
Everyone's like, "Oh, I need to buy some gold. I need to buy the gold, right?" So why? I don't know, right? Why? So.
I think you if you actually analyze long enough, you will find that every time, humans are, we've got this herd mentality, right? So we want to be where the majority is, because it helps us feel safe, right? We feel safe when everyone is there. Oh, then I am also there. You don't want to be left out. Hence the FOMO-ness, right? You feel the FOMO. So I guess when everyone's chasing the price up, then everyone continues to chase it up until somebody realizes, oh, hang on, I'm paying too much for this. Then again, everyone follows the herd back down and take your loss, right? You cut loss and stuff, yeah.
I think what I'm hearing is important too, when things happen, not just like ask why, ask why, take a step back rather than rushing in, right?
Yes.
So because other than that, it was just speculation and gambling, right? That's what this is my opinion now.
You're driven by emotions.
Driven by emotions.
Yeah.
I mean, I'll give you an example, right? Whenever we do online shopping, or this is no offense to the ladies, but when ladies go shoe shopping, right, or handbag shopping, they will go to every single store to find the best price or the best deal, right? And they put in the time, they walk 10,000, 20,000 steps within the same shopping center until they find the best deal.
Yeah.
Then they'll go home and think about it, then they'll buy it, right?
Yeah.
Now, do you do the same for when you shop, when you purchase stocks, or when you purchase crypto?
Maybe for guys, it's maybe for cars.
For guys, maybe cars.
Research PPI lah. Talk to owner, right? Hey, Bitcoin, wait, what's that? Buy. Hey, price go down. Right?
That's right. Yeah.
And it's a very cool analogy. Thanks for putting this is one of the reasons why I like them to be on the show, because when I listen to them speak, both of them speak, they were able to turn very complex things to something very easy to understand, right? Yeah. It's like now I can okay, now I know why I learned that. But it's good, right? The other thing I want to ask, since we're on this topic, right, before we move on to the next few questions, what is a white paper? Maybe for the audience to know, what is a white paper? Right.
Oh, good question.
Because if you don't know the white paper, then you don't know what you're buying, right?
Yeah.
Right.
Okay, so in crypto, I suppose the white paper is basically the reason you're putting down on paper the reason of why you are creating this crypto. So the Bitcoin white paper was written by this unknown person known as Satoshi Nakamoto, and it contains a lot. It contains the why. and then it contains the how, as in the technical part of it. So effectively, you're saying, look, I'm creating this Bitcoin because of this problem, and I'm trying to solve this problem, and this is how it is done. So that's effectively what a white paper is. And you will find, so initially, at the beginning, a lot of crypto projects, you cannot launch a crypto project without a white paper. But these days, there's just a single website and a few words and really cool graphics, and that's it. There's no white paper. So we're getting more and more what we call degen. So
it's all degen traders.
It's pretty degen. I was like, we just ape in and we just throw our money at it and hope it'll go 1,000x.
Is that what you call shitcoins or?
Yeah, pretty much.
I mean, there's a lot of terminology in the world. Sorry, I mean, it's not purposely swearing, but this is what the terminology used, right? They call it shitcoins, right? So like that, right? It's like buying a company with no purpose to exit. Oh, guys, we got company, right? Buy my share.
Yeah.
We will go up in price.
Why? I don't even know.
Look at my cool logo, right? You call it keep it 100 coin or whatever. So you can do this now, right? You
can.
Oh, and then you can trade it in the market.
Yeah, you can. So in crypto, there are two types of exchanges. You have a centralized exchange.
Right.
So this is pretty much you sign up for an account and then you create an account for yourself. Then you can start trading. Or there are these things known as decentralized exchanges, where you don't even need to sign up for an account. You just connect your crypto wallet to the site, and you can start trading. So
like your MetaMask and,
yes,
and
correct.
so on and so forth.
Yeah. So if you created a Keep It 100 coin and then you put it on Uniswap, right? And you put some liquidity there, people can start trading Keep It 100 coin.
The goal is to keep it at 100. Cannot go higher. No, let's go back 100.
Like start at 1. Start at 0.0001.
Cannot, must go 100. I'm just messing. But thanks for the clarification of white paper, because it's gonna. I mean, for me, it really prompts me to now really go and read. I mean, I always hear and read here and there, but maybe reading the actual white paper is like reading a company's,
prospectus.
Yes.
It's so cool.
So, because crypto's borrowed a lot of stuff from traditional finance, and it just made it faster, more efficient. So, a lot of the ideas are somewhat quite similar. So, if a company was going to IPO, they will issue normally a 200-page prospectus that's audited, and it's got all the other stuff in there. Of course, nobody reads it unless you're an analyst or or you're the corporate advisor that's actually going to do the submission, or the regulator. But it's there if you wanted to read it, right? Of course, crypto is less regulated in that sense. So, they call it a white paper, which is an academia kind of terminology where it's just a paper, right? So it's kind of that same concept. Yeah, same concept. But we're not saying, so right now there are no standards to those white papers, whereas a prospectus, there are standards, there are certain things that has to be in there, right? So it can be anyone free form writing anything, right? So, but at least you get to know the why, if it's real or like what you call it, is a shitcoin, Yeah.
So actually, as an extension of what Alvin mentioned about the white paper, and then you relate that to traditional finance, or what the crypto bros call TradFi.
Yeah.
So if you look at traditional finance, you have the advisory firm, right, that will advise a company if they want to IPO. So similarly, that a whole new industry has been created in crypto where they have advisory firms. These advisory firms will talk to the team, it's not even a company, right? Talk to the team that want to create their coin, and will help them write their white paper, help them with what's known as their tokenomics, and help them figure out how to launch and go to market. Similarly, what is being done by the investment bankers today. So a lot of these advisory firms have popped up in the last 10 years.
Oh, so there's a lot of similarities in that sense. All right.
Absolutely.
Well, thanks for shedding some light in this. I've got another follow-up question now. When I listen to you speak, I definitely know that you guys got extended. I mean, I don't know how many years you've been studying crypto, because you've been also having I think there's some people who ask you, hey, teach us how to do crypto, and you guys created a course, right, in 2017, right?
Yes.
Yes.
So how did you become more knowledgeable in crypto? Is it because of your previous exposure in equities, or do you knew already back then in 2017? Or I was it a story? Someone said that you bought it at 200.
So he was earlier. I called it a scam when he told me about it.
Yeah.
So this was 2013.
Okay, 2013.
That he bought his first Bitcoin. And then it took 2 years, and I only bought mine in 2015.
So did you knew that when you bought it at 200, right? 213, and then when you bought it at 215, did you know that it's going to be big or
Yours was less than 200, right?
I think mine was around 800. I might have bought it in 2013 at about the height. But so the background is in 1999. So my background is I did computer science. Then after that I went to business school. So when I was in business school, I actually wrote a paper about electronic money. And I got pretty deep into it. I did a lot of research, and I even went to talk to my economics professor. And I went down this rabbit hole talking about electronic money, the concept of e-money
in 1999?
in 1999. Then when I heard about it in 2013, I was like, whoa! They actually created electronic money. I need to go and figure out how to get some. And that was how I started the journey. And so I guess I had already done my homework in that sense. And then now it was a reality. So I had to, I wanted to figure out how it worked. Unfortunately, even though I bought it at 800 and it's 61,000 now, I don't have any of that Bitcoin left because back then it was more experimental. I was like, what can I do now that I have Bitcoin? So I started Googling for places where I can spend my Bitcoin. Because it's like electronic money, right? I want to spend my Bitcoin and I can send it from my phone. Like so cool back then. Imagine this is 2013, right? So
but iPhone is like 128 gigabyte only, right?
Yeah.
And I think 3G only, right?
4G wasn't even out yet. 4G wasn't even rolled out yet. So I Googled, and then I found, so back then I was living in Melbourne, and I found this sandwich shop in the city, and also in one of the shopping centers. So I would go there and I would order my sandwich, and I was like, can I pay in Bitcoin? Yeah, okay. They'll flash me a QR code, and I'll send right. Feel good about it. But
everyone's doing it now. Like, you guys like good. You're catching up to me.
but now that I think about it, it's a very expensive sandwich. Very expensive sandwich.
$72,000 sandwich.
Correct. Yeah.
So back then you didn't know it would grow to this, but you knew it's going to become.
I had no idea it was going to be.
But it was just
huge.
a genuine interest.
It was just a genuine interest in the concept of electronic money back then. But then as I eventually, then I kind of left it for a while. I got busy, right? Then 2017, I got a phone call from him. And it was like, hey, you still got a Bitcoin? I was like, I'm not sure. I need to check. And he says, go check the price now. So I looked at it. I was like, oh, wow, okay. And there seems to be a lot more interest now. And I think by then we had 4G. We had 4G. Right?
Yeah, 4G.
And so then I went deep again. And then, there were a lot of YouTube videos back then. There's this guy in particular called Andreas Antonopoulos. He's a Bitcoin educator, and he was really, really early into it. And he'd been educating everyone by going to different countries and having conferences. And there's a famous one where he's talking to an empty room.
Really?
Yeah, he was so early. And he used to give out Bitcoin so that people could experience Bitcoin.
Wow.
So I did a whole bunch of research. I watched a lot of his videos. I bought his book. I read his book, or his books. And then the concept of being able to actually hold and self-custody your own money became quite appealing. Meaning it was money that you could keep yourself without any third party, without any intervention from anyone. And so that became that was quite an appealing concept to me. But yeah, that was kind of how I.
So how did you because I'm sure that you've made some good profits through cryptocurrency, digital assets, right? So how did you became someone who's profitable in this scene?
I suppose so then in 2016 or 2017 was when he called me. So then when I realized how big it had become, and by then, because when I bought Bitcoin in 2013, Ethereum had not yet been invented.
Yeah.
Ethereum was invented in 2015.
15, yeah.
So but then I was like, oh, there's this thing called Ethereum. And then I realized how big it was, because there were a lot more websites now. There's a lot more information out there. And mind you, this is late 2016, early 2017.
Yeah.
And there were a lot more. I was like, oh, I had a flashback. See, because in 1994 was when I had first access onto the internet here in Malaysia. And that was even before TMNet was set up, or Jaring. Back then it was Jaring. Before Jaring was set up.
Yeah.
So we got in because a friend was setting up infrastructure for them. And so I accessed the internet. And from there, so I had a flashback in 2016, 2017, when I realized, oh my gosh, this is the same cycle that is happening now. What happened then? Because back then, in 1994, 9 out of 10 people that I asked, I said, hey, do you have an email address? Most people, what's an email?
What's an email, right?
Yeah. What email address? And so, same thing that, in 2016, 2017, do you have Bitcoin? What's Bitcoin? In fact, if you look at it now, more people have Bitcoin, but still it's not yet as widespread as, your smartphone in your pocket. So back then I had the revelation, oh my gosh, this is a similar tech adoption curve that's happening as it was with the internet, with the first wave, right? Because back then there was no Internet Explorer, there was no Chrome, no Google Chrome. It was Mosaic, and then there was Netscape.
Yeah, Netscape.
So I figured,
Yes.
If you guys know what Netscape is, we know your age, okay?
Yeah, correct.
yeah. So effectively, I took a long view and said, this is the second opportunity. So this is gonna be big. So really, it was that was kind of how I then decided to go in a little bit bigger. Yeah.
Well, thanks for sharing. All right. Yeah. So after you told him, you say it was a scam. Then
Yeah.
later you bought it at 250.
So he was like, hey, you just buy it, just buy. so
just buy.
just buy. So we were actually in Melbourne. I was visiting him.
Yeah. Did you buy the sandwich as well? Or?
No, I didn't buy a sandwich. I tried it with VPN services instead. Okay, also very expensive VPN service. But it was through an ATM at a shopping mall. That's where I bought my first Bitcoin. Back then, yeah. And there were no exchanges or nothing that you see today. I still have that very old picture. I was much skinnier back then. But yeah, so I put in, I think remember, 300 Aussie dollars, which is maybe 1,000 ringgit. Yeah. I think the price 200 to 300 bucks a Bitcoin, something like that. So then I also tried it, experimental. But what kind of light bulb moment for me was actually there was The Edge did an interview on Bitcoin, and I normally get calls for, I say, hey, can you comment on this? Can you comment on that from news outlets? And typically journalists are very busy people. Once they complete the article, they move on next. So what was interesting was, so this guy called me and said, hey, you want to comment on a Bitcoin? I was like, Bitcoin article, I'm doing like a sender spread. I said, yeah, sure. So he asked me all these questions and kind of answered, So basically, are you bullish or bearish, right? So I was quite bullish on it. Now, what normally never ever happens is that I get a follow-up call after the article is published. So he called me and said, hey, why do you think why are you so bullish? And I think that time the price was like $1,000. And then I was like,
US dollars.
$1,000 per Bitcoin, right? All-time high. Then I was like, hey, I thought you have published an article already. I've given you all the comments already out already. He said no. He said, because I interviewed 20 guys, not just local, international fund managers. And 18 of them said it was a scam or a Ponzi scheme. Only one guy was neutral. You're the only bullish guy. So I was like, okay, light bulb moment, because in what we do is when it comes to investing, we like to go when normally nobody like to look one, because that means it's not crowded. We like to look for kind of laggards or beaten down stocks and that kind of thing. That's always our strategy, very defensive value investing, right? And that was kind of a light bulb moment, because I know that eventually these guys will come to my same conclusion because they're all smart guys and they're in finance, so they understand this space. So eventually smart guys come to it. It probably won't be $1,000 anymore. So I was like, hey, we gotta move fast, right? And then here we are, right? How many years? 9 years later.
Wow.
Yeah, we're launching our crypto fund, you know.
Oh, this is so cool because what you shared was really cool because it sounded like your value investing principles played out also in this asset class.
Absolutely.
Yeah, absolutely.
Right?
Yeah.
So it goes to show wow, I'm getting like super goosebump moments because it's like it goes to show how important that you say, oh, you got lucky, right? But you get lucky because you have the skills. You're there, and then you can see what you can see. You played enough hours. You can see some things people cannot see, right? Right.
Yeah,
and then having the framework is so valuable to have that framework.
Yeah.
You know, and it's why, for example, like when you guys put out the opportunity to learn from you guys, Tracker One.
Yeah, thanks.
Okay, I was waiting for the moment I can just put money. I just want to learn, right? Because frameworks are important. Like how do you decide?
Correct.
Because I have this idea that if decisions can change our life,
Yeah.
then nobody taught us how to make decision, right?
Yeah.
And then you need. So for me, it's like, how can I download my mentor's framework decision? Maybe he don't know how to teach, so I have to study him until he comes out. This is his decision making framework.
Right.
And it sounds so when you say that, I was like, wow, you had a decision making framework. Therefore, you're able to take action, make new decisions inside the framework. Right.
I guess so, yeah, because it was like a value investor getting into crypto at an all-time high back then was like insane, right? Like, because Warren Buffett is like, god of value investing. He calls it rat poison squared, right? But that shouldn't change what other people say, right? Just you gotta go with that value feel. I mean, that value kind of framework that we go with,
Yeah.
Can I ask this a question though? I hear this narrative a lot though. Now we were talking about all-time high and everything, right? And a lot of hype coming on. I keep hearing this narrative because I've also joined some crypto groups and stuff, Telegram chats and everything. And someone say like, this is our time to create generational wealth. This is our time, boys. Don't miss it, right? And use their very degen kind of language, right? I have to learn their language, and they all short form everything. But what I get it is always like, this is a time for generational wealth. What do you think is true? Like, with now this halving just happened and then prices are hitting like all-time high, Yeah.
I think so. Obviously, I think investing is a lifelong process. Right? You really should be investing till the day you go home. Right? So you should be investing anyway. Generational wealth. I guess if you think about it, one generation is about 25 years, something like that, right? So what does it mean by generational wealth? So if you had gotten into well, let's not talk about Nvidia. Let's talk about, say, Amazon, right? When so remember, so for those of you who are old enough, you will remember the dot-com bubble, and then you remember when it burst.
Yeah.
So when it burst, Amazon was at about $116 or $106, and when it burst, it dropped to $6. Then 25 years later, went up to $3,300 something. So it's about one generation. So if you think of that as generational wealth, I suppose you could call it that. So I guess and I guess the other interpretation of generational wealth is, as we age, the baby boomers will probably be passing on their accumulated wealth onto
the next,
the next generation. And then what are they going to do? So the next generation, I guess we're looking at very young Gen Ys and maybe, or I suppose Gen Ys lah. Gen Ys. And if you think about it, except for the older Gen Ys, he says he's a Gen Y.
Millennial.
Millennial, right? Except for
you get the age group lah.
Yeah. Except for a lot of them are what you call digital natives. Yeah. So they're
happy to adopt digital stuff.
It's a very natural habitat for them, the digital world, right? Unlike Gen Xs or above, where you have to learn technology.
At
right?
30 years old, at 40 years old, right?
That's right. So when you're a digital native, I suppose cryptocurrencies come very naturally to you, right? Because you grew up ordering food from your smartphone. You know, you grew up. You know, your interaction. A lot of your interaction with the world is with you know.
You send video to your friend to talk to them, right?
Yeah,
you know?
That's right. Yeah.
You know, they did a very funny. Bobby told me this. Like, you know, they did a study that how people's the hand gesture, how to pick up phone. You know, olden days is like this, right? Pick up phone. So we ask an older person, how do you pick up a phone? They do this, right? And then they ask the younger, like as they go younger, it's like this. And the young now it's like this. Right? Now, I don't know. Maybe one day it's like this, right? I don't know, right?
Just like this, right?
Maybe like this, right?
Yes.
And then you're like, what the hell are you doing? Like nothing. But I like your answer, Andrew, because I think a lot of the narratives being driven out because I joined a few crypto groups and I will admit sometimes I get swept with the homo too lah. Maybe because I'm a monkey also, right?
We're all monkeys. We're all monkeys. We're all monkeys. Right?
And they are saying things like you can't create generational wealth if you don't have the balls to go and leverage, whack, you know, say, wow, it's right in front of you. You know, all you boys don't dare to put 100x, 20x. That's why you guys are always losers. That's why, you know, the generational wealth only comes. So I like your answer because you're looking at a very pragmatic, realistic form where this is very short term. I think what I've always gathered with very seasoned investors is that they see things in time frame. And a lot of the FOMO see things in a short little time frame. Maybe that's why casino is so addictive, right? Right?
We are a lot less sexy, you know, when it comes to this kind of investments, you know.
Oh yeah, like, hey, no, long term.
We're like long term. You know what?
It's so boring.
Yeah, boring. I want fast money.
I need my Ferrari now.
Yeah. So I like that narrative. Actually, I hope, you know, as you guys are watching this, it gives you more insights to really think about this whole space, right?
Yeah, and I think you also need to have that right mindset. Your why needs to be strong. If you know, I mean, yes, we love to have the story of $6 to $3,000, but realistically, how many can hold that long? I mean, if you're already up 10x, $6 to $60,
handshake already.
You don't want to sell? I mean, you know what I mean? You won't sell. I mean, it's crazy, right? So, and I think this is why, not that there are many opportunities to create generational wealth in any asset class, but the why needs to come, like it has to be strong, right? Which means that, you know, it's not so much timing the market, but time in market. That is
timing in market, time in the market.
Time in the market versus timing the market. Yeah, there's a big distinction with that, right? So, how many can actually do a $6 to $1,000 and see it drop to $500 and say, hey, maybe it's time to exit, and it makes new high again, right? So that will definitely play on your emotion. So your why needs to be like absolutely strong, right? So I mean, the easiest way to do it is, you know, they say buy and then forget about it. Just like don't even know that it exists and then just like absolutely forget about it, right? So that it's not so much for you to forget about it, but so that you don't get affected emotionally when you see it go like that. Yeah, correct. Itchy finger. Yeah, you need a plan. You need a plan. Yeah.
Cool. I'm sure we both participate a lot in the financial world. I got a question, maybe a personal one. What's your why? If you don't mind to share.
My why? As in for Bitcoin or crypto?
For just investing in general and
why?
I ask this because I think these are also the unspoken conversations. A lot of people talk about getting in, earn 10x. Look, they take the picture, you know, with their, you know. But I think I like to think the mindset is more important. It precedes the results.
Yeah.
Right.
Yeah,
Anything in being sports, in business, in investing, I fundamentally believe the mindset, because Keep It 100 talks is about mindset, money, and lifestyle. Mindset first.
Yeah.
Right.
Yeah.
So I just want to maybe dive into it. What's your why, if you both don't mind to share?
Yeah, you wanna go? Or you wanna go?
Yeah. Okay. So my why. Okay. So why do I get up every morning and do what I do?
Yeah.
One, as in invest myself, and two, why do we want to help? Why do you want to teach people how to invest? Right? Because a lot of people say, well, if you're so good, then you do it yourself. Well, yeah. Okay. I am doing it myself. So why you want to teach? Right? Okay. Why do you want to teach? And if those who don't want to learn, well, then we can do it for you lah, because we're licensed fund managers. So the why is one, if you actually analyze and look at our financial system. Yeah, so this is big picture, right? If you actually look at our existing financial system, people you go to any cafe, you talk to your friends, you're like, oh wow, things so expensive lah. Wow, this is so expensive, that's so expensive. Why does everything feel so expensive, right? Well, inflation, that's why. But what causes inflation? So then you start looking, what's causing this inflation? Right. So a lot of them say it's money printing. So what do you mean by money printing? So it's increasing money supply. So it's important that money supply increases, but if goods and services do not increase on par with the growth of money supply, then things become more expensive. Because now you have more money, but same number of goods or slightly more. So the ratio of money to goods it goes up, right? So the cost of something goes up. Now, if you have worked, I'll take an example. So if you look at Turkey, the lira has literally dropped off the cliff. The Turkish lira. And imagine if you had started work when you were 20 after you graduate, or 21, and then you worked till 55, right? And you've saved your money, you've bought a house or maybe some properties, you've kept the rest of your cash in FD, right? In fixed deposit. And then it drops so what happens to that generation? You've worked your entire working life, and then you lose all that value because of currency devaluation. So you've
That's
worked for
heartbreaking.
nothing. Effectively, you've worked for nothing, right?
And this is not an isolated case.
It happens all over the world, right? Especially
Venezuela.
to mismanage the economies. Venezuela, Argentina, right?
But would you say it happens even in semi-developed economies and developed economies too?
There's always the potential of it happening. And also, you know how they say when America sneezes, the whole world catches a flu? We're all feeling the effects of the inflation that happened when in 2021, America created 40% of the existing money supply. That means they had 100%, they added another 40% on top of that in a stroke of a pen or tap of a keyboard, right? So it happened. And now we're all feeling that inflationary pressures. So why do I invest? Because I'm trying to preserve my purchasing power. I'm trying to preserve my lifestyle, I guess. And why am I trying to teach? Why do we teach? Why do we teach? And why do we try to, those who don't want to do it themselves, we do it for them. Why do we do it? Because if you've analyzed since 2008, since the GFC, right, the global financial crisis, what has happened is that so for society to be stable, you need a strong middle class. You need that bell shape. You need a strong middle class. Now, the existing financial system and what's happening in the financial system with the inflationary pressures, right? You're effectively eroding the middle class, and you're creating this chasm, right? Where now you have a very large have-nots and very large haves, and once you erode the middle class, you have no stability in society. It just takes any reason, whatever that reason is, whether political or something else. You just need a reason, and society falls apart. You whatever you've built, it will be destroyed because you're going to be at civil war or society goes down. So I guess in why do I do because I'm actually trying to help preserve that middle class because it's better for everybody to have a stable society. Yeah.
Sounds pretty scary, but it's something that we cannot deny it won't happen, right?
Yeah. I mean, especially for those of you who have a lot of cash out there and it's just sitting in FD, you are losing your purchasing power. Right? You what you could buy with your $1 million today, you probably get half of that in 10 years time.
10 years time, in 10 years.
It's
Cool.
or less. Yeah.
Well, thanks for sharing. It really shed a different light to how the situation is. No, good why. Yeah.
So what he said, no, just joking.
I mean, I was so curious to know. But thank you so much. Thank you so much. Yeah. This is very, very profound actually. Very, very profound. Yeah.
I think for me, we're quite aligned on what we want to do. But I think for me, if you look at, the society at large, there's super ultra rich guys, right? And really, like recession, no difference, right?
Oh yeah.
And then you have that guys that are in the middle, right? That mostly, they have a job, kind of day-to-day thing, right? Or they run their own business in not a very big way, but which is a lot, right? We got a lot of SMEs in Malaysia. But if you look at our current financial system, really, it's quite unfair. It's really unfair, right? I can tell you personally, like those who are wealthy have a lot more access. Access to capital, access to information, access to products, access to opportunities. They are given access, right? So it's because capitalistic, right? Everyone wants to go and help that rich guy make more money, right? Because why? It's less volume, it's slightly less work, but because in finance it's based on value, right? We're based on value, so that's you get a lot more value doing a smaller clientele, right? And these guys in the middle really are, in my opinion, don't get the access. They don't get the information.
The capital.
They have some capital,
but not the kind of capital.
Not that kind of capital that's important enough that for them to give them access and information and so on and so forth. So what keeps me going and why I do this is that we're trying to build that. We're trying to build that middle part, right? We want to give these guys access. We want to give them the right information. We want to give them the same opportunities because we believe, the rich guys are there, and our guys and girls, they are there, right? It's a small community. If we can, in our own way, because there's many of them, if we come together, we become stronger. So we can get the same access, same opportunities, and same access, right? So that's why we're doing this, and that's why we continuously educate. Like, we spend a lot of time educating.
Yeah.
A lot of time. Like we spend probably a disproportionate amount of time educating, right?
You guys are pioneers in this as well, Equities Tracker, right?
Our late father started this business in 1976. So we kind of grew up around that business and that whole mindset on thinking long term and things like that. So that's so we've been around for a long time. We've been in space for a long time. We've heard a lot of things. We've experienced quite a fair bit. For me, actually, I calculated next year will be 20 years at Equities Tracker for me.
Wow.
Yeah. Like officially lah. Not counting those days when my dad would drag me school holidays, ask me to work, that kind of thing.
Labor. Data entry.
Yeah, data entry, right?
Internship.
Child labor. But yeah, so that's what we're trying to create. It's that which I think is sorely needed because it's very unfair right now. Yeah. And the guys
chasm is getting bigger and bigger, right?
Bigger and bigger, and the guys that usually get slaughtered. It's not, sorry to say, it's not the smart money lah. It's the other way around, right? Because in the markets, it's a buyer and seller, right?
Yeah.
So only one guy can be right.
Yeah.
The buyer or the seller.
Yeah.
And from our experience and from the data we've seen, it's always the retail shareholders or retail investors that get slammed, right? Like they are the ones that lose the pants.
And just like in crypto world, the same thing.
Yes, in crypto world, they call them exit liquidity.
Wow. I feel like trash like that.
Yes.
So you come in, so you are going to help me exit, right? You're going to help me exit.
Yes.
Wow.
Yeah, in crypto.
Ouch.
Cheaper.
But yeah, a lot, and I talked to some people who are students of Equities Tracker. And a lot of them are so happy. They always very happy to show. I didn't ask when they show portfolio. Hey, look, no, a dividend. It showed to me, and I think that's a few people I've met. I'm sure that thousands. I'm sure you have tens and thousands of students have been through what you guys do. And I think it's making a difference in their life. Like they completely see, they feel more confident to spend money. Some of them even have more confidence to have another baby and stuff that, right?
Okay, wow.
Yeah. I mean, from not directly, but I can see that as they start to master money, right? They hey, okay, maybe isn't that bad, right?
Oh, that's good to hear. I didn't know about this.
But the point is, what I'm trying to say is that when I hear what you guys do, and I went to attend some of your community events, both online and offline. I thought it was a very good thing. So guys, if you're watching, if you want to find out more about Equities Tracker, put the link in the description below. and check them out, right? I'll talk about something else. They offer a very cool thing at the end of the show, but do check it out, right?
Short intermission.
If you're looking for a way to increase your income and looking for different businesses to do, I know what most of you are thinking. It's a lot of risk, it's a lot of capital involved. I don't know what to do. And that's why I created Team Infinity Academy, where we not only provide a way for people to get into the business world without forking a lot of capital, but we also provide the education and the vehicle. We have a way that I use to make my money, right? This is the business I run. And I want to teach people how to utilize my business to build a life of their dreams. Now, if you're interested to find out more, there is a preview. We're looking for the right business partners. And inside that business discovery session, you'll find out how this business can support you to build the life that you want to live. If you're interested to find out more, link in the description below, and sign up for one of our webinars. Will be mostly hosted by myself. See you there. Now back to crypto. All right, thank you for sharing your why.
Yeah.
Right, I think it's really cool. What's the best way? Now, some people watch this video, confirm they will see the title, and then they say they want to understand how. Let's say the person haven't gotten started yet, right? What's number one? What's the biggest mistake someone can do in crypto, and number two is like, how do they get started?
Okay.
Yeah. I think the biggest mistake one can make in crypto is joining all these Telegram groups and they say now's the time, generational wealth, do it or else.
That's me.
And actually, like putting in your life savings and doing it. That's one of the yeah. Look, it's okay to join, it's okay to listen, it's okay to be curious, but to then listen to those guys and put in like Sailang, that'll be a pretty big mistake. I think before anyone gets into anything, it's educate yourself. Like that's the biggest investment, right? You educate yourself so that you know what you're getting into. Go in eyes wide open.
Study the white paper, like you said. I didn't do that, no. So study the white paper now.
Read the white paper, and for the crypto bros out there who are like shilling things, maybe a good question is how many of them have actually sent or performed a Bitcoin transaction from their own, whether hot or cold wallets, to one another? How many of them have actually used it rather than just speculate on it? Right, because there is a use case to it, right, and it solves a problem. So how many of them have actually used it? So that's yeah.
So a good way to look at it is like, don't just look at it as like a way to make money, but first look at it as understand the asset matter. It's like before you buy a car, go and
correct. Go and test drive it. Feel. You get the feel. Suspension too soft.
Okay.
Yeah.
That's a very good way to look at it. All right. Alvin, you have any?
I mean, since we got a lot of car audiences, I mean, it's like people always ask, hey, should I mod the suspension or exhaust? Should I make it go faster? I mean, really, the real answer is you want to go faster, you become a better driver, right?
Yeah. But no, I pay more money. I get a bigger CC. I now have a 4-door C-Class with V8 to pick up my children. I need 500 horsepower. Just kidding, right? But it's true. If you have all the horsepower, no skill, you total the car also. You put yourself in danger, right?
So best way to get started, maybe. Sure, if you want to get into crypto, like, try reading the white paper. Of course, you can get a bit technical. Try, kind of understand the why. I think nowadays, reading is kind of a lost art, especially to younger audiences.
I don't read. I can't read.
It's like flipping videos on TikTok or Shorts or whatever, right? That's reading right now. But pick up a couple of books. Kind of, one of the books that I read when I was really young, it's published in the 90s. That my dad gave it to me. He said, "Nah, you read it." So I read it. It's actually called. Now it's about stocks, but it doesn't matter. It's getting that mindset ready, right? So you replace stocks with crypto, it's kind of going to be the same. It's called One Up on Wall Street by Peter Lynch, right? Actually, his performance was even better than Warren Buffett until he retired, right? So he takes it in a very simple kind of way to read it. So I think there are a lot of resources out there, kind of investing. So, a lot of the techniques that we use in value investing, surprisingly, actually works in crypto as well. Effectively, very effectively. We still do that today, and it works. So really, it's kind of get that mindset, manage your emotions. I know it's easier said than done. And then invest in yourself lah. All right. If you're gonna invest $1,000, but then you don't want to invest in yourself, you want to buy a book, then kind of
weird, right?
Yeah.
So this it really is really cool because I'm thinking about one way I'm looking at it is like, sure, you can invest and buy and sell, but the education stays with you forever. The mentality, the mindset, right? The framework stays with you.
Yeah,
right? As long as you use it, right?
Yes,
yeah.
Yes.
All right.
Become a better driver lah. That's all.
Become a better driver.
Then every incremental mod is gonna be even more satisfying, right?
Correct, right? Now you can, and I think some people say, why you want to go track lah? I'm not a big track fan. I don't chase lap times, but I think at the track I start to appreciate the car more. Like, okay, the car snaps like this, or the car don't like this, the car don't like that. Then I start to, I start to appreciate.
You kind
the
of
car.
find the limits.
Yeah, I find the limits a bit more,
Yeah.
and then review all my weakness. Then I go get coaching. Then I appreciate the car even more, right?
Correct.
So I think,
and then you get better. You get better and better over time. You get more proficient as a practitioner.
Yeah. And I think the same thing goes for trading. I maybe let me know if it's right, because when let's say we go-karting, right? I don't know if you've ever been go-karting.
Yeah.
It's like if you're thinking I want to go fast, I want to overtake him, confirm make mistake. Like, the moment you say I need to overtake him or I need to outrun this guy, you confirm will always make mistake. But if you just like, okay, here's the corner, I'm going to set up for the next few corners, and after a while it's like you do, I'm behind somebody already.
Yeah.
Then you go, they make mistake, you overtake them, right? So it's like the more you focus less on speed and you focus on the
Getting better. Yes.
you suddenly become fast.
Yes.
Is it a same you think in
that's
stock trading
a side
or
effect,
in
right? You
investing?
Yeah.
Side effect?
Yes, that becomes a side effect.
Yeah. Not looking at how much money you earn, but looking at am I getting more educated?
It's a skill, right? It's a skill. So honing your skills effectively.
And don't believe everything you read on the internet. When you see kind of people sharing all their trades wins, they never show their losses. That's not real, bro.
Actually, this is not. I'm gonna ask some people, right, who are not trading. Like you show how many losses. They say 30% is normal for them, 30, 40. Some even lose more than they win, they still make a profit.
Yeah.
Just they know how to manage the loss very well.
Size it, right?
Yeah. So I thought like, in order to win, I must win more often. Sometimes they have a strategy. They know they're going to lose more.
Yeah.
It means they start going in this. They know that there's a chance they're going to lose more, but they know how to control the losses.
Yes. Yeah.
And they know that they're putting themselves in a position when they win, they can win bigger. Right?
Yeah.
It's very interesting, when people focus on win, make money, profit, then jialat.
And then they try to compare, this guy is making how many 100%? Oh, I'm only here.
That's me lah.
Pressure.
I sell already. Wow, I make 40%. Say, wow, you go 60%. Wow, shit, I should have sold. Monkey behavior. All right, cool. Before we go on to the two last questions, since we talk about books, quick fire question. If there's one book you recommend our viewers to read, all right? Since I love reading books.
Yeah.
What book would you like to read recommend the viewers to read? Okay, I'll start with mine first. Richest Man in Babylon.
Oh, okay.
That's a very good book.
Very good story book
very
teaching
good.
that even someone in deep debt can find a way out.
Yeah.
I already recommended that one. That One Up on Wall Street. I think
One Up on Wall Street.
Yeah.
Peter Lynch,
I
right?
think it's easy. Yeah.
That would be on my reading list.
One of them is the Richest Man in Babylon is a really good one. As a Man Thinketh.
As a Man Thinketh.
Yeah. So because you talk about mindsets, right? Mm-hmm. So this one really helps you get perspective of this whole mindset that we speak of, because we are usually bound by, or we are limited by what we set, boundaries that we set for ourselves. So this so when you read As Man Thinketh, I'll give you a very short excerpt. It starts with a walled garden, right? Mm-hmm. So if it's a walled garden, and then if it is not, there's no gardening done to it, it's not tended to, birds will fly by, crap on it, and then it'll just be full of weeds and all that. That walled garden is your mind. If you do not tend to your mind, then, like you just keep doom scrolling, then that's the stuff that goes into your mind, right? Mm-hmm. But if you're very directed, this is what you want to do, this is what you want to get at, so you tend to your mind. So everything that you do is very focused on attaining that. So it's about it's about mindset. So As a Man Thinketh by James Allen.
James Allen. Okay.
Yeah.
And it's the same thing you apply in investing, right? You know what you want out of it. What's the why you invest, right? Then you rather than getting
getting weeds.
Sidetracked,
Focus,
right? Especially easy in today's world, in crypto or this is crypto. I think even in normal asset classes, people will share, wow, I make this much, I make that much, wow, piang, right? Maybe last time got less lah. Last time because you have no social media, right?
Yeah.
Yes,
Correct.
Only when you yam cha only you say, hey bro, you see how much money I make? I know people don't call bro last time, right? but imagine today even more, you get more distractions.
Yeah.
Alright, cool. Thanks for sharing. We've come a little bit far into this conversation. But I want to ask a very important question, right? Because I saw something what you guys do pretty cool in Equities Tracker. You guys not only educate, but because you're also a licensed fund manager, you also offer a private mandate management, right? So I thought at first it was like some unit trust or normal fund, but then when I came to learn of it was very different.
Yes.
Right? And I learned that private mandate usually is only available for people who have X amount of money, right?
Correct.
Then they get the investment banker call them, hey, Mr. Vong, we don't want to, right?
Yeah.
So can you tell us about what it is, I just think it's a very interesting concept, because I think it's something that maybe if you're not very keen to manage your portfolio, is something that you can look at and what Equities Tracker do, right?
Yeah, sure.
You guys also do this. Guys, they also do it. I think it's the first time I heard this. They do it for also digital assets. I think no one in Malaysia is doing it, right?
No, not for digital assets.
Not for digital assets, right?
Yeah.
Oh, that's really cool, right? You mind to share a bit more? Yeah.
Sure. Thanks for a free plug.
I mean, it's not that I think it's something valuable, right? I want to bring it to more people to take a look at this. Yeah.
So when we looked at the problem, like the guys that are in the middle right now, if you wanted someone to invest for you, you could really only do it two ways: unit trust, buy property, fixed deposit. Quite limited in what you can do. Maybe some robo advisors who essentially also buy ETFs, which are also funds as well, right?
Yeah.
So kind of where we kind of looked at it and said, look, we need to fix the one structural issue was that if you look at academia, closed-end funds and open-ended funds. So what we do know is that for funds, everyone puts money into a central pool. That fund manages that, right? Easy for the fund manager, and that's why unit trust is so popular. It's very highly profitable, right? Because everyone just puts money in or takes money out. Now the problem with that structure is that a lot of times the fund manager, depending on market cycles, right? They are not just managing the investments; they are starting to manage fund flow instead. That means they need to figure out today who's going to redeem how much fund flow is going to come in. And we typically see when markets go up, you get more fund flow into the funds. When markets come down, you see a lot of people selling and exiting those funds, right? So really, when it comes to that, actually, it's no longer just the fund manager making decisions on buying or selling. It's actually all the other unit holders who then decides force the fund manager literally to buy more at higher prices and to sell at lower prices. And that's kind of gives you an idea why also market cycles move that way. So when we set out to do that, we said, look, we can't do that model because if you're a fund manager, you just manage the investments. You're not supposed to be managing fund flow, right? So we created what we call individual accounts. So we manage each and every individual account. Now, the reason why a lot of these individual accounts are not that popular and they need $1 million to $2 million, foreign banks is $5 million and above to open an account, is because it's very costly to run a single account, to have one fund manager just to look at it, right? Because it's a value game, right? So what we did was we actually looked at the problem very seriously and how do we solve this? So how do we give the customer the same attention regardless on the amount that they put in? Right, and that's so we built a system around that. Andrew's team worked very hard and we built a system around it. We tested it. A lot of people didn't believe we could do it, so we did it. Anyway, we did it, and it's actually now running. Actually running quite well. And I can say a system like that, where it's actively managed, right, not passively managed, right, is something that we've achieved. So we've actually managed to bring it down to 50,000 per account instead of 1 million.
So you don't have to be a guy with 1 million, 2 million, or 5 million. You can enjoy such management of your funds.
Correct. Yeah. You can expect that same kind of level of service as a high net worth. So we're bringing access, we're bringing opportunities at a much lower level, and that's what we're hoping to do. And so we're doing the same thing with digital assets as well. So when you open an account, that account is yours. all you need to open an account is 50,000 ringgit. I know we've not been able to bring it down much lower. Of course, we constantly move and see how we can make it more efficient, right? To bring it to lower levels. But right now, we brought it to, I think, quite an acceptable level, accessible enough, like 50K for people to access. So so we don't call it a fund actually, because a fund is a collective fund.
Also, it's a wrong terminology, right? So
Yeah,
you call it private mandate.
We
right?
call it's called a private mandate, but to the average person, they're like, what's a private mandate? Right? So we just call it an investment account and kind of keeps it simple.
Some jurisdictions call it a separately managed account.
Oh yeah, correct. SMA lah. I think in the US they call it SMAs. So you can open as many separately managed accounts as you want. Right? We don't charge anything extra for it. Just
and to say that the funds belong to the owner.
The owner, yes, correct.
And that's why you have like I've been through the whole process onboarding with you guys. So it's like you manage. I give permission for you to manage my funds, but the fund belong to me, for example.
Correct.
Yes.
And it's helped, with the licensed third-party custodian and
that's really important.
That's audited and everything. We give monthly statements.
The securities also you guys are also complying with the securities.
Correct. With securities law, we have to because we are also fully regulated by SC.
Yes.
So you get the same level of comfort. Then we have to comply. What any other fund manager in Malaysia today will have to comply. We have to comply as well. Yeah.
So you do this for equities, Malaysian equities
Malaysian
now?
stocks. Yeah.
And then you also do it for crypto.
We also
digital
do it for
assets.
crypto,
You call it digital assets, right? Yeah.
Yes. We've called it the digital assets because that's what the Securities Commission calls it, and I think they do that for a reason as well, because I guess crypto, because there are so many scams in crypto, so automatically when a normal person hears about crypto, first thing they think about is scam, right? They associate the word crypto with scam. So I guess by rebranding it to digital assets, I guess sheds some neutral light on it.
Yeah.
So you guys give the option for some people who say, hey, I really like your methodologies, but I had no time to manage my funds. So you can take an option to do this, right? I think many of your students also take up this offer.
Yeah. They manage some themselves, then they let us manage some of them, and then they try to compare, of course. But because we run it full time, right? Our whole organization is dedicated to investments and nothing else.
You have research team. You have
we have research. We run data as well, data analytics. Our tech team is to make it more efficient as well. We have our own tech team in-house as well. So our group is about almost 50 people, 50 of us. So we're not we're very focused in what we do. So we don't have a property development arm or, doing something else. Everything is just in investments, right? That's what we focus on.
Got it.
Yeah.
So who would this be product or say this service be suitable for if you just really narrowed it down for our viewers? Yeah.
If you have, say, a portfolio of maybe something you want to look to retire on, or maybe for, say, long term, like your child's education, for example, and you want exposure into crypto assets or digital assets, right? This way, you can just open an account with us, and then we can do it for you. It's quite hands off. You can log in and actually I can see exactly what we do for you.
Do I have to remember all my keys?
Yes, okay, good point.
Do I have to remember like security phrase and all that? I know the answer already, but some of you guys are like, oh man, I lost my freaking keys.
That is probably because digital assets are so different.
Yeah, because self-custodian, right?
It's self-custody, right?
Yes.
So we have to use regulated entities that do that custody for us as well. So they keep everything, includes the keys and everything else, and everyone's licensed from the cash custodian to the digital asset custodian as well. So for the user, they just need to. So in Bitcoin, if I lose my Bitcoin, I can't call the 1-800 Bitcoin helpline and someone will pick up and say, "Can you help me? So I transferred the wrong account." There's no such thing, right?
Yeah. Bye-bye.
We become that institution where I want to check out what's my crypto doing, or I want to sell, or I want to put in more money. You can talk to us. You can talk to an actual human being, and then we keep all that for you, right? On your behalf, you are the beneficiary, lah.
I saw the lady who was talking about the custodian side, right?
Yeah.
Yes.
Keys, what's that?
Co-keeps.
Co-keeps, yeah. Co-keeps. Really cool. Yeah. I heard that's very cool technology. Yeah.
Yeah.
Cool. And this allows somebody who don't have the kind of big funds to get this as low as 50,000, they can get in.
Yeah.
Right?
Yeah.
How do they contact you? I mean,
How
Just
do I
go
contact?
back.
That's a good
Okay,
question.
put a link. Bro. You give me a link.
Oh,
put it
maybe
on.
I'll give you a link and then yeah.
Fill up a form.
We can include the link.
Yeah, we can talk to no obligations. We can just do a Zoom call. You want to have a chat, find out a bit more. We
Oh,
can
you
do
got staff to do that.
Yeah.
Okay,
We have a team
okay.
that can do that for you. Yeah.
Cool. Right.
Yes.
But and you guys also have a lot of events. Where do they find out the events about Equities Tracker?
So we have a lot of events. We post it on our website. We also have it. If you kind of follow us on social media, we have it on I think our Facebook page as well. Instagram, I think. Yeah, that's where we're at. So, or you can just drop us an email. It's on our website. And then I get invited to the next event. We can do that as well. Yeah.
Cool. All right. About all the.
In fact, we have one event coming up on the 16th
Oh yeah.
for digital assets.
Digital assets.
Today is
We don't be published yet.
but there will be more and more.
Yeah,
There'll be more. There'll be more.
Cool.
Yeah.
All right. Anyways, before we wrap up our little podcast, I know we can go. I'm really enjoying myself. Hope you guys are.
Yeah.
I hope you guys got value as well. I just maybe a question is I know it's a off tangent question, but I think it's maybe something we can talk about and laugh a little bit. What is the silliest advice you hear? Sometimes in certain things you go pass advice around. Like, a car, right? Oh, use lighter engine. Oh, the car go faster. Right? You all give release pressure for your tire, more grip. Like, you hear all this silly advice going around, right? So what silly advice do we hear? You often hear your students, or maybe some guys come to you because you're you guys are involved in the financial world. They come to you, hey bro, I hear this. What's the silliest advice you think being passed around in? So that when the viewers hear it, they're like, oh, okay, it's a
scam.
To be cautious, right?
Yeah.
Like, stop being in the monkey mentality, right?
I gotta think.
The worst mistake is to never participate in crypto, right? Is that
there's so many online gurus out today, and you see them kind of pop up and disappear and pop up depending on markets, right? What's the worst advice I've seen? I gotta think about you.
I'm trying to think also. What's the
too
worst,
many?
what's the worst advice?
This is a tough one. I mean, I can share maybe a lot of instances of crazy things, right? We see a lot of people, like the worst advice normally I find comes from listening to what someone had just said. Like their friends are normally, hey, just buy like sure win one, and what I find is that typically for investors, the higher the promised return, the less they think about risk. So if you can promise someone 15%, they'll be like, yep, shut up and take my money kind of thing.
And
right?
not really think about it, right?
Not think about when we're saying, we're targeting 10 to 12% return. Wow, then the whole long list of questions come. Are you licensed lah? You got custodian lah? You got this lah? You got this?
Yes.
It goes down lah? But the higher it goes, the less people ask questions about the risk.
So that when the higher promised return, then you have to do the counterintuitive and ask, hey,
how
why?
are you getting those returns?
Right?
Yeah.
Yes.
Correct.
Yeah, I don't know, but back then during COVID time also there was a website, I wouldn't say the name, right? There was a FX something, right? and it was like, whoa, bro, every month 7%. I'm like,
Yeah. That's right.
If every month 7%, why don't you sell your product to bank, right? Bank will give you 100 million and then say, I give you 1 billion, right? Why go to us, right?
Yeah.
Okay, anyways, so it's a good one. Like when someone promised very high, so take a step back and say, well, why?
You should put on your risk lens even higher. Not the other way around.
Yeah.
When you promise low return, ask like 101 questions, because it's realistic, right? So maybe the kind of worst advice is I lost my thought.
Don't waste your. I mean, like, don't miss the opportunity.
Don't waste the opportunity.
Is it?
Something. Normally, if we get this crazy advice from, because people always ask me, hey, what do you think? And we always they always ask me, hey, what do you think about XYZ, whatever lah, stock lah, crypto, whatever.
And their minds have already been made
They
up.
already made up their mind already.
It doesn't matter what you say, but what do you think?
Yeah, what do you think? And I'm 99.9% of the time, I can guarantee you, they've already bought it already. So it doesn't matter what I think, they already bought it. So
They've already put money in.
yeah. So we always find it, and especially if it comes down, that's when hey, what do you think? That's when they start to research and actually doing real work, right? Instead of speculating, we see that so often. If it's too good to be true, it usually is.
It usually is. Okay, cool.
Yeah.
I mean, it's not a silly advice, but I think there's something valuable over there. Yeah. You have a good laugh also lah. Yeah. So we'll buy car. So hey bro, this car good or not? You buy already, bro. Buy already.
Buy first thing later.
Yeah. Hey, this tire good or not? Hey, tire on your car already.
Yeah.
Any instances that or maybe echo the same thing with Alvin?
Yeah, I think pretty much. I think we all experienced the whole 7% a month, and then hey bro, imagine you just compound, my daughter's education taken care of already.
Imagine.
Yeah.
Like just I'm getting 7% every month, compounded.
I actually humored that one lah. I put some money just to humor myself. Right? And I said, hey, got money, take lah. I got my money back lah. But then I see the whole thing is like, oh, when is it gonna die? I was waiting, like, ooh. Then when the thing came down, I was like, oh. Jialat way. I hear some people they sell house, they put money inside. Crazy way. Then they start the installment, the insurance payment to fund this. I say, wow. Here I see also a bit tahan way. I tell you.
That's like playing Jenga lah. Playing Jenga.
Jenga, right?
When is he gonna topple?
Musical chairs.
Interesting. You say the higher the promised return, the lower the risk. Suddenly the risk appetite disappear. And then when very realistic return, then 1,000 questions. Oh, very interesting.
We face that all the time. Every time we face that.
Wow. That's such a revelation for me. It really is.
They literally check, hey, what's your license number?
Yeah.
So we have to give them a license number, give them a link.
Show me the link to the website. Where does it say your license? Who are your fund managers? How many years experience they have?
It's crazy, right?
Yes.
And then when you say this, it suddenly hit me. Like I look at this, some people say, hey, this meme coin is I never then promise return so high. Then suddenly, I'm the liquid. I'm the exit liquidity. I'm laughing because it's painful, right? Anyways, Andrew and Alvin, I really enjoyed talking to you guys.
Thanks for having us.
Likewise, yeah. Thank you.
I hope that all of you got value out of this topic. I think it's prime time now. We talk to do more conversations around this. Thank you for bringing so much value to our audience. And I'll put their links to Equity Trackers to find out more about what they do. Very, very cool. Right. And hopefully this is not last time we see you in this podcast.
Yeah.
Cool. Yeah.
Right. Looking forward to the next one.
Yeah.
Right. Anything you want to say to our viewers before we wrap up?
I guess
to throw you on the spot.
Drive safe.
Trade safe and invest safe and drive safe.
Invest safe and drive safe. Yeah, right.
Cool.
Yeah.
I think just educate yourself, and it's okay to take risks. But because the whole game of investing is really risk management. It's managing your risk. Every time we drive, there's risk, right?
Correct.
But we're managing that risk. So it really is just about managing your risk.
That's very cool. Yeah. A lot of people focus on win, but then they don't look at the risk factor, how to manage, the skill to manage risk, and the mentality to manage risk. Right. Thank you so much, gentlemen.
Right.
And guys, if you enjoyed this episode, please give us a like button, subscribe to this channel, and also let us know in the comments below what do you think about this topic, and what else would you like to have conversations around. Right. As always, keep it 100. Love you guys, and peace out.
Oh.
This podcast is managed and also created with Sparks Digital. Now, why should you listen to this ad? Because content creators like myself, we got so many things to do. And if you're a content creator or you're a marketing person or trying to reach out to more people, creatives are one of the most important part. How to do something, what to do, ideas and stuff like that. And I rely a lot on the team in Sparks Digital to create content, just like this one over here. So look, if you need help with ideas, campaigns, or even dealing with crisis management, whatever, these people, they're really smart and they're really fun to work with. And the best part is that it keeps giving me fresh ideas on how to grow my channel and also my influence, right? So big shout out to Sparks Digital. You want to find out more? Link in the description below, and let them know that Thomas sent you. Maybe they give you a special discount. I don't know. But Sparks Digital.